So, any more earnings you want to hit on? We had Cloudflare, which is a new company that we added to the portfolio, reported earnings. Positive reaction there. Is anything you want to hit on Cloudflare there?
Yeah, and it just kind of shows how much in the near term narrative drives share price. We had Cloudflare before its earnings report. There's another podcast I'm sure people out there listen to, Bill Simmons. They do the guess the line where you say a football game and you try and guess who's going to be favored. If I was doing a guess the line when I saw Nets earnings, kind of the numbers break, I would have said, it's down 10%. I believe they are now up 20%. And it is just partially this company has just such a phenomenal story right now. It's, David, if once again, we'll kind of archive past episodes of the podcast, but in one of the earlier ones, you had asked me what's a stock that you love, but it's just a little too pricey right now to add to the portfolio. I said Palantir, because we had started last year publishing a report on AI. We had picked out Palantir as one of our favorite opportunities and just kept going up and up. And around the time that we had recorded that episode, it was trading closer to, I believe it was about 40 times sales. I said, it's just a bit too up there for me to touch at this point. It's tripled since then. So I wish we would have added. I still personally hold it. I haven't made any changes to my personal holdings. But the next best story in terms of how cleanly you can take a company's business and kind of draw it to trends in AI after Palantir is probably Cloudflare. So, this is an expensive stock. I think when we added it, it was before earnings, when we were looking to add it, it was trading closer to about 25. It was trading closer to 25 times this year's sales. It's even more expensive now. And the reason, David, is Cloudflare is what you'd call an edge network. By itself, that's not like a great business. You probably remember Fastly, which was doing content delivery.
Unfortunately, I do. Yes.
Everyone loved it in 2020, but again, it wasn't a great business, because if you start, what you're doing is kind of building servers that are located closer to people. If you're not able to build more value add services on top of that and, do the classic land and expand, it's just not going to be a great business. But that's exactly what Cloudflare's done. They have tremendous execution. They've moved from content delivery and what you call denial of service attacks to build a much bigger security business. And what they did was they built a developer platform, which, you can run services closer to the consumer, which was a pretty niche concept until AI took off. And all of a sudden, training, you can go do a training run anywhere. It's not that big of a deal of needing locations closer to consumer. With inference, latency matters a ton. So all of a sudden, these developer services that are offering a network that's extremely close to users has incredible value. They call it Workers AI, and that's the service, once again, for running inference through Cloudflare. The other thing that you have is security. People have asked us to talk about security. Security is really taking off. You look at the charts of a lot of these security stocks, it is up and to the right now, and that's because of a realization that security is an area where being a leader kind of maybe gets its next advantage, because again, we've talked about unique data being the biggest key to AI. And the more attacks that you're seeing by being the leading vendor, the more data you have to be able to build a better product. So it's kind of the self-reinforcing cycle people are now buying into. And finally, with Cloudflare, David, again, with our business, when AI first started, when AI was really taking off after NVIDIA's famous earnings report in early 2023, when I was building out my initial AI portfolio, one of the first stocks I went to was Cloudflare, because I was like, if there's all this traffic from all these AI agents, and also at a certain point, you're going to need to protect your data against basically being trained for free by these models.
Yep.
The number one company to fill that gap is actually Cloudflare. And that's what they're moving into right now. They're just starting it where essentially you can protect your content, you can charge a rate to be able to be ingested into models. And that's what Cloudflare's next big business opportunity is going to be. So David, it's an extremely expensive stock. But again, this is probably the cleanest story, I would call it, in terms of how their products really lead into the growth of AI right now. You saw Palantir. the past year, them seeing, I don't know what it is, it's probably like 600% growth from, when they were at $20 near the beginning of 2024 to today. That didn't require going from 50% growth to 150% growth rates. They grew their top line about 20% to 36%. I think Cloudflare, as we see a lot of growth in inference from the emergence of these reasoning models, will see a similar expansion on top line. And I think it's going to be a stock that people most closely associate to the growth of AI. So I don't think we want a portfolio full of these companies, right? Let's call a spade a spade. A stock selling for a sales multiple of this high is risky, but I also think if you are wanting to take some chances on having stocks that kind of define this generation, I think Cloudflare has a space in your portfolio, which is why we added, 15,000. And I think there's another huge narrative in AI that, we're about to add software stock today that I think will also be a leader in one of the spaces that's going to attract significant media attention this year.
Yeah, I want to get to the new company, but just to your point on, high valuation multiples, high price to sales, high PE. If there's, any lesson learned over the last couple of years with some of these companies in the AI space, it's be careful judging only by those valuation metrics. Is right before an inflection point on the top line or even on earnings. I don't think we're going to get to it in today's show. We had AppLovin, everyone's favorite named company, report earnings. Again, a company that when you look at just the amount of cash they're bringing to the bottom line because of AI, it's just staggering the growth that some of these companies can see. I think AppLovin was up 700% last year, and it was up 33% in a day this week. So very risky just to say it's expensive, I'll never buy it. You can often get paired with explosive growth on the business side, which very quickly doesn't make it quite as expensive.